In this stock market analysis, we will analyze the S&P 500 and review the NASDAQ and see if they are setting up a bull trap. Looking at the index chart here, we see all the indexes have stayed above the December 2018 low, all except the Dow Jones Transportation. And that is the only index is still underneath the 2018 December low. And that's probably due to the weakness in the airline. And the other thing is we also note the NASDAQ 100 and the NASDAQ Composite, they both made a new recovery high. And that seems to highlight the most recent rally in the market is mainly due to the concentration of the tech stocks. All right, looking at this monthly chart on the S&P 500, we can see that the price is still well within this megaphone. And for year to date, if we take a look at the December close to last week close, we're basically seeing the S&P 500 have lost somewhere around 9.32% or a little bit over 300 points. And on the weekly chart here, the trend is still up. And we see that it has gained 3.5% or so, a little bit over 99 points for the week. And on the daily chart here, the trend is still up. And also, if we take a look at the March low to the close on Friday, we can see the S&P 500 has regained more than 737 points, and that translates to somewhere around 33.67% in less than 2 months. So before we take a closer look at the price action for the S&P 500, let's go take a look at the stock market sentiment and the stock market internal and see what they are telling us. So on the sentiment chart, the put-call ratio is down near the 0.75. It actually dipped below a little bit and closed on Monday at 0.74. And also the VIX continue to pull back, and right now is sitting just underneath the 28. So these two indicators showing that the market is getting a little bit more greedy and less fearful. Now let's take a look at the market internals. First is notice the up-down volume on Friday. Actually, last week it had a couple strong days. Last Friday, the up-down volume ratio was finished at 8-1, favoring the upside. And also notice the advanced decline. It has more than 2,100 more advancers than decliners on Friday. And it was a strong day on Thursday as well. And the S&P 500 gained more than 48 points on Friday, or 1.69%, on a backdrop of a bad non-farm payroll, with more than 20.5 million job loss in April, with a jobless rate of 14%, and that is the worst since the Great Depression, and the market went up. So go figure. The New York Stock Exchange new high, new low is still fairly subdued, and it's sitting at 26 on Friday. And it's basically just kind of fluctuating between this, above the zero mark and below the zero mark. So in the coming week, if the S&P 500 continue to move up, we need to watch this internal to see how genuine the upward price action is. And for the AD line, it is showing fairly supportive of the upward price action. The NASDAQ new high, new low show a little bit modest sign of expansion. We still need to see a little bit more stronger sign of the new high expanding as the NASDAQ continue to move higher. The NASDAQ AD line is lagging a little bit, so we need to see this AD line to come up and make a higher high as the NASDAQ 100 continue to move higher. Otherwise, we'll be looking for a possible pullback. Let's take a look at the S&P 500 price action a little bit more closer on this daily chart here. Before I continue, I want to thank you for watching. These videos take time to make, and I hope you find them useful and informative. If you like the contents in this video, give it a thumbs up. That will help me a lot. And if you're not a subscriber to my channel, click the subscribe and the notification icon so you won't miss any future video from me. If you have any suggestions or comments, please post them in the comment section below and share this video with others. On Monday, we saw the price pull back to the 50% retracement level and got a bounce off from that, and then came up and bump up against this 618 retracement near the 2933 level on Friday. Now also notice that I have adjusted the trend line to form a price channel, and with this adjustment the trend is still remain to be up for the daily time frame. So next week we'll be watching to see what price come up and fill this gap here, and also get above this 200-day moving average. If it failed to break out of this retracement zone, then I'd be watching for the price to come back down and retest this 50% retracement. Now notice this dead cross here. A lot of talking head basically saying that when a dead cross occur, then that would be bearish for the market. And if we look at the what happened to the price since then, you see that the S&P 500 essentially have gained 390 points or 15.37% since this dead cross occurred. So much for the bearishness. That's why don't pay too much attention to these price pattern. Pay more attention to the price action. Now let's go and analyze the S&P 500 ETF, the SPY. On this 60-minute chart of the SPY, we see that the price last week, it dipped down to this 281.20 and then kind of bounced off from it and chopped around near the value area high before it broke out on Friday. Now let's update the volume profile with the latest prices. And we see the price is sitting right near the value area high. The value area has expanded once again. So with the price sitting near the value area high, in the coming week, if the market continue to move up, then we'll keep an eye on to see would it be able to come up to this 297.97 and the 300 level, this price zone here, this low volume zone. And also essentially fill in this gap here and see would it be able to continue to move up to the next low volume zone. And we probably will see it, if it continue to move up, probably chop around between this 308 and the 300, essentially this high volume area. If it is unable to move up, then we'll expect to see it come back down and possibly retest this VPOX, this 282 level, and see if would get a bounce back up. Otherwise, we'd be looking at it to retrace back down to the value area low near the 275. Also, the other thing is I have a price channel here that we can also look at this price channel. If you come up and fill this gap, and it could hit this upper price channel and find resistance, and then we could see it come back down and possibly retest this 288 area. So once again, we are at a crossroad. Either the market going to break out of the upside or continue to consolidate inside of this value area, the April value area. Also keep an eye on the price channel. Price could move up to the upper channel near the 300 and then reverse back down. So is the market setting up a bull trap? From the put call ratio and the VIX, they do show a bit of complacency. But if you look at the price action and the market internals, no signs of deterioration. That doesn't mean the market will go up unimpeded as the S&P 500 move back above the 3,000 level and the SPY move above that 300 level, that might draw all those skeptics back into the market, and that's when we could see a more downside reaction. But until then, I will remain biased on the long side. So what do you think the market will do next week? Are you bullish or bearish? Let us know your thought on this market in the comment section below. Thank you for watching. Good luck and stay safe.